Hi, good evening, and welcome to another episode of the Weekly Market Wrap. My name is Daniel Ang, and today, of course, is July the 6th, 2025, and we are officially into the first week of a new month. And we have just concluded a very chaotic June, but coming into July, we can expect even more uncertainty, and definitely we're going to see a lot more whipsaws in markets because as we enter into this week or this coming week, we can expect a few major events to occur, and this may actually cause volatility to spike. And we shall talk a little bit about what event will be those events that can cause the market swings. Now, before we get into the content itself, I'd like to remind you guys that this presentation is not an offer to buy or sell any kind of securities, be it FX, CFDs, or any kind of margin products. And the trading of any kind of margin products do carry risk of loss. So do be aware of your own risk tolerance before you attempt to trade any kind of margin financial products. And I'll be sharing with you my views on the various markets, and do understand those are my views and has got nothing to do with the sponsor, which is IronFX, a company with many operations across the globe. And they has been sponsoring my event for a year now, and I'm grateful for their sponsorship. And I will also be, how should I say, those opinions are mine alone, and definitely we won't be holding any responsibility for any action that you may take as a result of attending this presentation. And this presentation has not been vetted by any regulatory body. And if you're okay with that, let's get started. And before we get into the content itself, if you've got any question that you want to ask me in regards to my presentation, please drop down your comment into the Q&A, and I will address them as and when they pop up. Okay, so let's get started. Now, the week itself started off very quietly. This is the past week has been a shortened week because the US celebrated their July 4th holiday, which is their National Day. And at the beginning of the week, on Tuesday, we hear that Powell does not rule out interest rate cut this month. So this is major because we all knew that President Trump has been harassing him every single week, asking him to cut interest rates. So the next FOMC is going to be scheduled for the end of the month on July 29th and 30th. Is a two-day event, and the final result will be announced at the last day of the meeting itself. So what Jerome Powell says is that actually uh, he would have cut interest rate much earlier if not for the tariff that President Trump has actually rolled out. Because to now, when he announced his Liberation Day tariff, that was on April the 2nd, and shortly after, he also imposed a 90 days pause on rolling out those tariffs, and that 30 days, the 90 days pause is coming up on July the 9th, and he has already said that he attempt to strike 90 deals in 90 days. That has not quite panned out the way he thought it would happen. In fact, other than UK, he does not have any formal trade agreement until this week, in which the US and Vietnam actually declared that they have a deal. So as for the one that is the biggest elephant in the room, which is China, the US has actually have two rounds of negotiation, first in Geneva, and the last one was in London. And they came up with a framework, and the framework is not an agreement. You can see the language used by both sides are very unsimilar. President Trump is among the first to actually claim that they have a trade deal, whereas China say that they have a framework. So a framework is to me not a deal. So whatever the case is, I think President Trump is urgently wanting to at least show that he has some result from his Liberation Day tariff policy. So we shall see, because at the end of the day, China may not necessarily want to loosen too much their control over rare earth mineral, which is at the top of the list for the Americans, because the lack of rare earth minerals, which leads to the production of magnets, will affect a lot of high-tech production in regards to automobile in the States as well as to the military. But China has been very, very clear that there will be no export if those rare earth mineral will be used for the production of weapons. So we shall see what happens, because at the end of the day, what the US wants, they are not able to get it from China directly, and what China wants is also not going to be fulfilled in one fall sweep. Okay, so we will have to see going forward how would these two biggest economy going to be tangling or rather untangling. So we go forward on Wednesday, the feud between Elon Musk and Donald Trump has actually escalated to the point whereby there are suggestions that the US should actually attempt to deport Elon Musk. Okay, so this is getting very personal for both of them. Elon Musk is actually very upset with the One Big Beautiful Bill because his department Doge was actually created to actually cut expenses, cut unnecessary expenses, and to downsize the government to actually make the U.S. budget deficit a little bit more manageable. But with the One Big Beautiful Bill, all caution has been thrown to the wind. In fact, by the end of the week, we already knew that the Congress has actually passed the One Big Beautiful Bill, and within 24 hours, President Trump has signed it into law. So that is already here. And according to a lot of analysts, while the focus is in cutting taxes, but most analysts say the tax cut will only benefit the top 1% of the US uh, economy, meaning to say only the oligarchs will be able to enjoy the massive tax cut, whereas the deficit would have to be funded by the cut in social benefits. A lot of social benefits has been cut to actually pay for the uh, reduction in taxation. Moreover, I think the bulk of the shortfall for the budget deficit is going to be likely to be filled up by the income from tariff. We have been saying that tariff is definitely a revenue generating exercise, which President Trump has denied all this while. But we all have to realize that the Liberation Day tariff, even the top bracket now has been exceeded. President Trump has actually threatened, okay, to actually increase those tariffs with a baseline of 20% and going up as much as 70%. So he definitely see the tariff as a revenue generating machine to actually pay for all the program that he's trying to roll out, in a particularly how to pay for the One Big Beautiful Bill. Okay, so we have to watch this, but the relationship between Trump and Musk has escalated to the point where by the day after President Trump signed the One Big Beautiful Bill into law, Elon Musk announced the launching of a new political party. So we'll talk a little bit about that and what impact it may have, if any. So midweek, we have news that Vietnam and US actually struck a trade deal. So this is the second trade deal other than the one that has been announced between the US and UK. Now, the Vietnam-US trade deals comes like this. There is a baseline of 20% tariff for all export into the United States. And any kind of transshipment via Vietnam, okay, will attract a 40% tariff. In return, US export into Vietnam will attract zero tariff. So this is a blatantly lopsided trade agreement. But I think the Vietnamese are so desperate that they need to actually open the floodgate to allow the inflows of US capital as well as US technology and US businesses, and also to be able to continue to sell to the United States. So that is going to be complicated because Vietnam is part of an ASEAN-wide free trade agreement called the RCEP. So the RCEP is actually ASEAN plus a few countries, plus Korea, plus Japan, plus China, also include New Zealand and Australia, which attracts zero tariff among signatory to this free trade agreement. Now that Vietnam has opened up the door to US with no tariff, there is a very high likelihood the US will actually use Vietnam as a battering ram to actually export into the ASEAN and into the RCEP members without tariff. So this is going to be huge because ASEAN, in fact, the RCEP has not respond to any kind of comment just yet, but we all knew that the RCEP has been compromised. Not sure how the rest of the members of the free trade agreement is going to respond to this US-Vietnam trade deal because, in fact, Vietnam is now becoming the back door for US export into this region here. So this is something that we will have to consider. It will definitely impact the entire Asian economy that has been signing into this free trade agreement, including Singapore, because part of the deal includes uh, requiring Vietnam to actually open 50 seaport along their massive coastline, and this is going to impact negatively all the existing port, starting from Malacca to Klang to the Dixon port to Singapore. This is going to be massive because if the US can export with zero tariff into Vietnam, and if all the seaport that they demand Vietnam to actually open can be used as a pivot, okay, bypassing the entire Malacca Strait altogether. So this will have massive, massive impact. So in the years to come, we will be watching these deals. And the last I heard is that Indonesia is also at uh, is also about to sign a deal with the United States. I think this template between the US and Vietnam will be used to pressure all the other Asian countries to actually replicate a similar deal with the United States. We know this is a very lopsided deal, and China has made it very, very clear any kind of trade deal with the United States that actually victimize China is going to attract secondary sanction. So we would have to wait for China to respond to this US-Vietnam trade deal, whether Vietnam will be caught between two major economic power as a result of this trade deal remains to be seen. Okay, but it's going to be huge. And of course, we all knew that Powell has been criticized by President Trump every single week. Now he actually tell him to quit immediately. In the weeks ahead, the current U.S. Secretary of the Treasury, which is Besson, who is also nominated or speculated to be one of the candidates that will replace Powell. He has come out this week and say that they will decide on a new candidate within the week itself. Okay, not necessarily within the week, but in the coming week. Okay, so we will have to see if the nomination is the name pops out, then it will definitely compromise the authority of the existing chairman of the Federal Reserve, which is Powell, because if there are two opposing voices, then the market will be even more confused who to listen to. Should we listen to the existing chairman, or do we listen to the incoming chairman? So the net result will be more confusion than we need, because the market right now is actually very, very confused as to all the different policies that's coming out of the White House. So this will be another fight, and we will have to see. And Powell said earlier on, like I mentioned, that he would have cut interest rate a long time ago if not for the uncertainty brought about by the Liberation Day tariff. Because to today, in fact, the deadline comes on July the 9th, which is Thursday, okay? And we would need to know how high are those tariffs, because without knowing, we definitely cannot gauge whether it will be inflationary or not. But everybody guess is that it will be inflationary. Okay, later on when we talk about the decline in the dollar, what impact it will have on the overall balance of trade for the United States, and whether a weaker dollar has actually benefited US export, that will also be telling us where inflationary is heading. Inflation pressure is definitely building up in the US economy, and it will have consequences for the global economy. Okay. Now, this is another member of the Federal Reserve Board. He's currently not a voting member, but his comment is also very influential. He's the guy who is presiding over the Atlanta Federal Reserve. So, uh, Raphael Bostic is actually a regular voice, and he is of the opinion that the Federal Reserve should maintain its current stand as far as interest rate, meaning to say he don't expect interest rate to be moved either way. Okay, definitely he's one of the hawk within the Federal Reserve, so he's not in favor of cutting interest rate just yet. Okay, now this is the bill that President Trump has actually signed into law. And that all is very symbolic because he signed a bill into law on July the 4th, which is the US National Day. And analysts were saying that this bill, with the passage of this bill, because of the cut in tax collection and they cut in benefits, they cut in what call it the budget expenses, which will likely come from the bulk of the social benefits. It will actually create a more debt, and the budget deficit is definitely going to widen by as much as $3.3 trillion over 10 years. So this will be inflationary because if that's the case, within this bill, they also wants to raise the US debt ceiling by $5 trillion. Okay, so that is going to be huge because considering the fight for a debt ceiling is going to be due next month in August, but because August is a recess period for Congress, they need to be able to pass some kind of resolution either to do away with the entire debt ceiling negotiation or to suspend it altogether. Okay, so that is going to be carried out this month. So this month is going to be a very, very pivotal month for a lot of policies. So Trump also said after signing the big beautiful bill into law, and he also said that come July the 9th, which is the last day of the 90-day pause, he is unlikely to extend the pause. But knowing Trump, this may not if he decided to extend it, it will not be out of character. In fact, there are people who believe that because there are so few countries that actually managed to strike a deal with the United States, there is the possibility of an extension of the 90-day pause. But he, at the moment itself, he said that he won't extend it, and he has already signed a letter to 12 countries, of which he has not revealed which country and how much tariff they have to pay, and that will go out on Monday, and we will have to continue to monitor who will be among the first 12 countries that will be imposed with tariff. But we can know for sure the baseline 10% is non-negotiable. Most likely it will be something very similar to Vietnam's deal, 20% base, and anything above that depends. Okay, but that will also bring about another problem for Japan. Japan is one of the major economy that the US wanted to have a trade deal with, but Japan is facing its own problem. Okay, first of all, its debt situation has gone from bad to worse. There is no demand for their debt, very similar to what the US is facing, and they do not want their currency to be too strong, which is something that the US Treasury wanted the Japanese yen to strengthen. Okay, and not sure how this is going to pan out, but the 25% tariff on steel and aluminum is going to badly damage the Japanese automobile industry, which depends a lot on the US for exports. So US is also not happy with Japan for not importing rice. Now there is a major rice shortage in Japan for many, many months now. And Japan refused to import American rice. And we all know the existing ruling party, the LDP, which has been in power since Second World War, depends on the agricultural sector, which is the farmers, for their votes. So they are not about to abandon their voters, okay, which have kept them in power to please the Americans. So it's going to be a very tough fight. So with no clarity on how Japan is going to respond, the world will still be at tenterhook as to how the big uh, between these two economies is going to pan out. After all, Japan is the fourth largest economy. It has slipped from number three, slipped from number two, now it's number four. Okay, and we will continue to watch how Japan respond. But Japan has said that they will not back down. So this is going to be problematic for President Trump. Okay. Now, the last but not the least, we have the meeting that just concluded yesterday, in which OPEC plus means include Russia. They are going to increase the production of oil, and this is definitely quite perplexing because when you increase the supply, you definitely going to drive the price of crude oil lower. And that is also one of the reasons when the weekend after US struck Iran's nuclear facility, everybody was expecting crude oil prices to rally. It did rally at the opening in Asia the following Monday after that strike, but it has been downhill all downhill since. Okay, so definitely the oil producers have locked in uh, by selling forward their oil futures, and that may have actually allowed them to enjoy the high prices because they have sold forward those uh, during the early morning spike the day after in Asia trading. Okay, so right now nobody is sure where crude oil is going to hit, but based on the chart itself, uh, long term it is still bearish, but near term there is the prospect of a possible bounce in crude oil prices. So we will tackle that as we go into the chart later on. And the agreement is to increase the production of oil from 411,000 barrels per day, which has been in place for the last 3 months for May, June, July. And now they want to increase it to 548,000 barrels per day. The leader of this OPEC Plus is, of course, Saudi Arabia being the largest oil producer. And the cost of producing oil in Saudi is actually quite low compared to elsewhere, especially Americans' cost of production. So I think the Saudi wants to flood the economy, flood the global supply with low prices so that they can take out the marginal producer, especially the American producer. Because, like I said earlier on, the cost of production in the States for producing the same barrel of oil is so much higher in the US. And for Saudi, it is possibly in the low single digits per barrel. Okay, whereas US need at least $65 per barrel to be profitable. So I think that is also one of the reasons why they are wanting to flood the market with more oil. And explicitly, Saudi is said to be wanting to punish two of their uh, uh, production partners, okay, which is Kazakhstan and Iraq, because apparently they have been producing more than their quota, and I think Saudi wants to punish them as well. So again, we will be watching this move because it will decide whether oil prices is going to escalate. But I think oil prices is not just based on demand and supply. A lot depends on the political situation in the Middle East. And if any time the situation worsen, it could actually bring back the bulls in the in the oil market. So continue to monitor this as well because the cost of production is oil. And if oil prices go up too much, it will definitely show up in inflation. And this is the last piece of news which I added just before this section itself. The latest news is that Elon Musk has actually threatened to launch a new political party if and when the big beautiful bill is passed. And now that it has been passed, Elon Musk actually went on his X social media to actually did a poll asking American whether they are open to him launching a new political party called the America Party. And it seems that the feedback seems to be positive, and therefore Elon Musk has gone ahead and registered a new political party. Most people will mistakenly think that the United States only have two political parties, the Democratic Party and the Republican Party. Yes, these two are the two mainstream party and they are the dominant one. But earlier on, I did a search. There are more than 100 smaller party called the third parties in the States. So if Elon Musk can garner and rally all these third parties into a coherent party, then maybe he would have uh, some some chance, okay, to actually disrupt the two-party structure that the U.S. has been operating under. So we will have to see, but it is a highly dangerous move by Elon Musk because right now both parties will be taking out their knife to see to make sure that this will not turn into a major challenge of their political dual uh, duopoly. Okay, so we will have to continue to watch this as well. Not sure whether he will succeed in any meaningful way, but it will actually bring about a personal security issue for Elon Musk. Okay, so let me check if you have anything that you want to ask me. Not yet. Let me see. Okay, there's no question asked yet, but keep the question coming. The first significant economic data released in the past week has been the ISM manufacturing PMI. We can see that PMI is still in negative territory, although it has improved to 49 from expectation of 48.8. The previous month of May was 48.5, but we can say that it is way below the 50 line, which is the red line seen in the chart here. So it is still in contraction zone, although it has perked up a little bit. Not sure what's the reason why manufacturing perked up instead of decline. But again, you can see that it is still in contraction zone, very solidly in contraction zone. So this could be due to a backlog of orders that has accumulated since the announcement of the Liberation Day tariff in April. So in the months ahead, we will want to continue to monitor this data here. And for now, it seems that it has not gone back just yet. Yes, improved somewhat. So here next we have the ADP. Now this is a major disappointment. The markets were expecting actually an increase in private employment. The previous month, which is May, saw an increase in 37,000 new jobs being created, and that was revised downwards to 29,000. But the consensus was for 95,000 jobs creation. The number came in not only positive, it directly went below the zero line to negative 33,000. So that was a totally unexpected result. Market did not react too negatively to this number, okay, because this number has traditionally been very volatile. So it's subject to revision, and the revision to turn positive next month after more data comes in. But for now, we are assuming this negative 33,000 is going to be the number after the revision for next month. It is the first time we have seen private hire has actually contracted so much that it has actually gone into negative territory. So this definitely is not a good reflection of the state of the US economy. If less employer employs, that means to say there is less order, and they are definitely not very positive about the US economy going forward. So this is definitely a wet blanket as far as Donald Trump is concerned, because if the US economy tank, okay, he cannot blame it on the previous administration anymore because it will be on his lap. Okay, so this actually set the stage for a quite a negative sentiment going into the following day, which is Thursday. We all knew Friday was the national day, so the non-farm payroll, which has always been released on a Friday, has been pushed forward by 24 hours into Thursday. So this number that came out on Wednesday for the ADP numbers actually set the stage for lesser expectation for the non-farm payroll. However, we were again surprised because the non-farm payroll actually increased by quite a fair bit. Now, this is the average hourly earnings. We can see that earnings are beginning to continue to contract. The US workers are not seeing their income matching higher prices. In fact, we can see month over month, for the month of May, it was up 0.4, and it is down half to 0.2 for the month of June. Then year over year, we can see the income for American workers continue to slide from 3.9 to 3.7. Now, 3.7 is the lowest we have seen this year so far. Okay, so it is barely just above the lowest point in 2024, which is also July at 3.6. Now it's at 3.7. So we are not that far away from scraping the bottom. So US consumer definitely will be squeezed because income has dropped, prices has not necessarily dropped. Okay, in fact, there are pockets of inflationary pressure, especially in shelter. So we can see that those who are paying rent continue to be squeezed by higher rent rates because interest rate has not come down. Mortgage rate is hovering just below 7%. So it is going to be very painful for people who are still renting property in the States. Okay, so this number is not a good development of the state of the economy because labor market is the other set of data that the Federal Reserve is monitoring, the other being the CPI, or rather the PCE data, which is the consumers consumer expenditure. Okay, so we can see that the labor market, the health of the labor market is very important because the Federal Reserve is trying to see if the data suggests that the labor market is in trouble. Because if it's in trouble, then they will have no choice but to cut interest rate early. So what came up on Thursday was this number. Non-farm payroll actually increased to 147,000. We can also see that the revision for the previous month of May was 139,000. It was revised down to 110. Market was expecting 110. It came out to be 147. So it's a lot better than what the market was expecting. So based on this alone, the Federal Reserve will have no reason to cut interest rate because unless the non-farm payroll numbers goes drastically low, okay, like what we saw in the ADP numbers, then the Federal Reserve will have all the excuse to start cutting interest rates. Because the non-farm payroll does not show or suggest that the labor market is in trouble, then therefore the Federal Reserve may not necessarily act on the next FOMC, which is going to be due on this month, 29th and 30th. Overall, you can see unemployment rate dipped back from 4.2 to 4.1%. Again, this 4.1% in unemployment rate seems to confirm that the labor market is has not gone critical just yet. So the Federal Reserve, based on this set of number, would, in my opinion, have less reason to cut interest rates as much as they want to cut interest rates. Okay, so this is the data that we have so far this past week. Then we have the services PMI. Services PMI above the expansion zone. Now it's back above 50. Remember the month before, it actually went negative. I would say negative. It actually went into the contraction zone of 49.9. Okay, and there was no revision, so the number was good. And for the month of June, we can see that services sector has actually garnered more activity. It has since popped up into expansion zone, but only barely. Okay, so again, this suggests that US economy is not on the rope just yet. Okay, as far as the data is concerned, at least it is not obvious that US economy is in trouble. Okay, so how does market react? We know that the US equity markets has been trading the new high, but the one that is lagged, that has still not broken the new high, is still the Dow Jones Industrial Average. This suggests that money managers, global money managers, are not convinced just yet to pile back into the US equity market in a big way because we don't see it in the Dow Jones climbing into fresh all-time high. But again, this may be too early because you can see that the bounce from 42,000 odd has been very persistent since that low in the April of 7th. You can see that the equity markets has been very buoyant. In fact, the climb over the past 2 weeks has been very, very sharp. And we are not that far away from the all-time high at 45,073. This week high is 44,885. It is only a hair breadth away. So whether or not we're going to have a brand new high in the Dow Jones again is going to be monitored. But I have problem with this rally here. Although technically the market is very bullish, but there is no breadth. When I check, because I do give talks for CME and for some of the local brokerages in Malaysia, I do look into volumes and open interest. All the major equity index traded out of the Chicago Mercantile Exchange, as far as US equity market is concerned, has no major increase in volume. In fact, the open interest is not anywhere near historical level as far as a bull market is concerned. When you have such a strong move in prices, you will logically expect elevated volume and elevated open interest. I don't see that, and that is still something that I am having problem with this rally. Although, like I said, technically the market seems to be wanting to go higher, so I'll be very cautious in chasing new highs. Okay, because personally, I do believe we are in the tail end of the final leg of this run. Okay, S&P 500 obviously has already been charging into fresh all-time high for quite a while now. So we can see that June has been a very good month for the S&P 500 and the Nasdaq 100. Both these two index are very retail orientated. So the retail investors are definitely more bullish compared to the money managers, which I would consider to be smart money. So the S&P 500 this past week has gone up into brand new high at 6,284.65 at the highest point on Thursday itself. Okay, so this is the situation we are in right now. The S&P 500 definitely continue to charge higher. Likewise, the Nasdaq 100 also exhibit the same momentum from the low of 16,542. Now the market is at 22,000, almost 900. So there's a massive rally in the Nasdaq 100. In fact, the Nasdaq 100 was the weakest going into April. And now we can see that from the April low, since the 90-day pause was announced, the Nasdaq 100 has lead the market higher and now is among the first to charge into fresh all-time high, ahead of the S&P 500. So right now, again, the same thing that I saw in the S&P 500 in terms of volume and open interest is also reflected in the Nasdaq 100. So I am not convinced that it will be able to sustain much longer. The market is definitely loaded by retail investors, and this is something we have to be worried about. And when we look into the US Treasury, you notice that the Treasury yields actually peaks out at the end of May. And this past week, we can see that Treasury yield is again climbing. Okay, so this is no accident because the US Treasury yield uh, climbs, it means there is no demand for, or rather the underlying, which is the 10 years Treasury, move inversely from the US Treasury yield. So the fact that the yields has bounced back up, it means the 10-year bonds has slipped again. And we have noticed that not so much about uh, foreigners selling US treasuries or US based assets. I think it is a revaluation. And I think there are certain factors that is not directly linked to the United States. I think the problem now comes from UK. This past week, we have another situation. Remember Liz Truss, the former prime minister who didn't survive more than 2 weeks in power. And there was this run on the UK treasury called the gilt. The same thing happened this past week. In fact, the current chancellor of the exchequer, so-called their finance minister, may not be able to survive the current run because the 10 and 30 years gilt in the UK has actually surged this past week. Currently, the 30 years gilt yield is above 5.43%. So this brings back memories of that turmoil whereby the Bank of England will have to come in to backstop. Okay, so this surge in US Treasury yield is directly linked to that phenomenon that we saw in the UK gilt market this past week. So when you look at the US Treasury yields and to see what kind of movements it may actually evolve, we want to keep a close eyes on the UK treasury markets, okay? Because I think that one have a direct link to how global investors is going to view US treasuries. So this is something that you want to continue to monitor as well. Huh? Gold has not gone anywhere. It is still stuck within a consolidation range. So the last settlement price for spot gold on Friday was $3,306.64. This is not that far away from the all-time high of $3,500. So we can see that this past week, we can see gold price continue to edge higher, but it is very much still in consolidation. We cannot rule out another dip in gold prices. However, this being a major bull market in gold market, I won't be surprised that it will continue to resume its rally over time. The market expectation is for a move to $4,000 per ounce, and then followed by a pullback before the market, attempts to trade even higher. So basically, if this gold prices continue have a chance to dip again, I think that will present a perhaps last call to buy gold. Okay, because technically speaking and fundamentally speaking, gold prices are supported. So in my view, I am very bullish on gold. I'm very bullish on all metals, including silver and platinum. And we can see that in the entire precious metal complex is a beneficiary of all these uncertainties in US economic policies and how the world look at the dollar. After all, the dollar has lost 11% in value, and this is the single largest loss of the dollar value for the last 50 years. So a lot of people say that this is attributed to the uncertainty as a result of President Trump's economic policy, particularly the damage done by this tariff. But again, I think President Trump has, during his campaign period last year, has always said that he wants a weaker dollar. So this does not come as a surprise to me. Okay, can he have the cake and eat it because he wants to be able to sell more US products? But from the other data, as far as the export data is concerned, yes, the US budget deficit has shrunk. And that's because less people are selling goods to United States. But a weaker dollar should actually result theoretically in more export for the US. But that is not happening. In fact, US export has also plunged by 5.3%. So we can see that a weaker dollar has not translated into higher exports for the United States. That means to say that a weaker dollar has not resulted in more goods being sold by United States to the rest of the world, because nobody wants to buy from the United States. And there is this de-dollarization that is still continuing. Now, this weekend, we have the BRICS conference in Brazil. In fact, they come up very strongly and say that we should definitely have an alternative to the dollar-based global monetary system. So that is definitely playing a part, and also a reminder that gold is increasingly seen to be a better reserve. I have mentioned previously the Bank of International Settlement reports have shown that gold for the first time has overtaken the euro as the second largest reserve among central banks, just behind the US dollars. So there is that trend towards wanting to divest away from the US dollars. Okay, so could be one of the reasons why gold prices continue to be elevated. I think there's a couple of questions that I saw briefly. Let me consider. Let me deal with the question first. There are two questions here. Let me deal with you. Raja Kumar is asking, trust on good. Oh, thank you very much. Retail investors also buy the blue chip stocks that are part of the Dow Jones. How does the Dow Jones measure only money managers' investment? Now, the Dow Jones is a benchmark. Okay, a lot of international money managers will have to measure their performance against this index here. So because it's only 30 stocks that make up the Dow Jones, so and they are all blue chips. So when the Dow Jones is lagging behind the other index, which are primarily the S&P 500 and the Nasdaq 100, which are, like I mentioned, those are very retail-oriented index. So it is a glaring divergence between the so-called smart money and the retail money. Okay, so S&P 500 search in the new high, the Nasdaq 100 search in the new high, whereas the Dow is still trading below the all-time high. So this tells me that the smart money is not necessarily buying this idea that everything is lovey-dovey in US equity markets. So this is my biggest bear hug here. Moreover, when I checked the volume and open interest, I also did not see corresponding spike in volume and open interest, which traditionally should be also correspondingly be supporting the higher prices. So this is something that I observe, not necessarily that it is not supported, but it is a little bit unusual in my opinion. Okay, so for retail investor to buy the dip and the smart money is definitely a problem for me. Okay, normally what you want is that the smart money leads the rally, but here we have the retail investor leading the rally in the US equity markets, which is a bit problematic in my opinion, because in my opinion the retail investors are always the last to get into a game. Okay, so if they lead the market, it is not necessarily a very positive development. Okay, so hopefully that is something that you can take away with. So not saying that the smart monies are not buying, just that they are not as aggressive. Okay, they have a bit of a reservation because when you look at the price action, I don't see the same optimism in the Dow. Okay, now let's continue. The crude oil prices has attempt to rally. You can see that the high traded in crude oil was actually on June 23rd, the day after US bombed Iran nuclear facilities. That was over the weekend. So the Monday when the market opens on June 23rd, everybody expect oil prices to surge. It did, but only at the opening. Okay, so we can see that Asia two uh, uh, 2 weeks ago reacted by opening high, and then it went up a little bit before it starts to unravel. And the drop has actually taken the crude oil prices back below $65 per barrel. So we can see during the 2 days, the 48 hours, we can see crude oil prices slammed, okay, uh, by $20 per barrel. That's huge. Okay, so we can see that $76.14 is actually oil producer locking in the high prices. Because if they control the supply, if OPEC Plus know that they are going to increase production, they know that any rally in crude price, uh, if it's not supported by their trying to flood the market, then obviously they don't believe that crude oil prices can remain high. So when crude oil prices rally on Monday, on June 23rd, every of these oil producers starts to sell forward using the futures contract. So that result in massive unwinding of the crude oil prices. So where we are now, the only way crude oil prices can rally again is definitely going to be tied to geopolitics. If Israel decides to attack Iran one more time, okay, then it will be interpreted as an escalation, and that will definitely will cause oil prices to rally one more time. Okay, so right now, based on the fundamental, which is going to be more supply coming on stream, okay, there is no reason why crude oil prices can rise based on this change in fundamental. The only catalyst could be a escalation in the geopolitics in the Middle East. So watch out for events in the Middle East because it can still cause oil prices to rally. Personally, I am long-term bullish on crude oil. Anything below $65 to me is definitely screaming to be bought because we all know the US cost of production is at about $60 to $65. Anything below $65 or below $60 per barrel, it makes no commercial sense for US producer to go into production because they'll be losing money. Okay. So I think at the end of the day, once all the competition has been wiped out, which is what the OPEC Plus is attempting to do, then they can have the market to themselves. And that by that time, they can set higher prices. Okay. So here, we did see a bit of a bounce in crude oil prices this past week. Whether that is going to be representing as a technical rebound or it's going to be a green suit that is growing as far as possible reversal in crude oil prices. Okay. So we will talk a little bit more about crude oil prices when we come to the chart later on. Index has cradled to an all-time low. Okay, this is not, I won't say all-time low. This is the lowest in 50 years, not the all-time low. So we can see that since the beginning of the year on January 2nd, okay, the dollar index has peaked at 109.50 and it has been sliding. At the lowest point this past week at 96 even, you can see that the dollar index has plunged by 11%. Okay, and this is a reflection of perhaps the mass desertion in US-based assets, the dollar assets. Okay, whether it's treasuries or whether it's equity markets. So for all we know, the US equity market is only played by the retail Americans. International investors are not necessarily buying that rally. Okay, so right now we can't tell because there is no data to suggest that it's the case. But you can see that the dollar index has not brought about any improvement in the US budget deficit. It has shrunk, but shrunk because America buy less and it has also sell less. Not so much there is a major spike out in US export. There isn't. So the dollar did not cause the US export to actually surge. And that must be something very worrying for the Trump administration because theoretically, with a weaker dollar, what you're trying to do is to create the condition for more export. But we are not seeing it. In fact, total US export has plunged by 5.3% over the last few months. So this is again telling us that a lower dollar did not end up as a better, or what you call that, as a stimulus for US export. Okay. So whether the US dollars is bottom, because we can see that in the last 2 days of the week itself, the dollar index bounced a little bit. But I think to be fair, we can see that the trend is actually quite clear. From 109.50 to 96 even, it is basically one track. Okay, a bit of bounce in between does not mean the market is going to rally, but I think short term there may be a chance for a rebound, a technical rebound within this very persistent downtrend. Here we have Bitcoin. This is up to 6 o'clock this evening. Okay, we can see Bitcoin is struggling at 108,000. But 108,000 is not bad considering that the all-time high is just under 112,000. Okay, so while there is no major run-up in Bitcoin prices, but it has not slid that much. So overall, when we look at Bitcoin, it does appear to be still very much in the bull phase. Okay, but I think Bitcoins need a catalyst, and we may not have to wait for very long. The Genius Act is passing through Congress right now. If the Genius Act got passed, I think the knee-jerk reaction is for all digital asset prices to rally. Okay, so this level may be challenged very, very shortly. So now we go into the individual markets. Let me see. Okay, there's no new question now. I want to share with you my chart. Now, as you can see, this is the Dow Jones. We will start with the monthly because we are into a new month. As far as the Dow Jones is concerned, we are not that far away from the all-time high. Okay, but this past week, because it's a 4-day trading week, it's not a full week because of the National Day in the States. It does not necessarily reflect the full sentiment. But this coming week may actually be the first time that the Dow Jones have a chance to take out the all-time high. So we will watch whether there's follow-through buying in the Dow, especially how it closed by the end of the week. If by the end of this coming week, the Dow Jones closed on a higher end of the week's trading range, that will be very convincing for higher prices. Okay, but if it breaks into a new high and by the end of Friday it closed back down, that will be bad news. Okay, but by and large, we will, I am not open to chasing this market higher. Although I knew technically there's a possibility it will extend higher, but I'm totally uncomfortable about buying near the high. So as far as me, I am concerned, I am definitely just going to monitor and not take an opinion. Okay, so we can see this past week, it did not close at the very high of the range. Unlike the week before, it closed at the upper end of the trading week. Okay, so the view is that yes, there's a possibility the market will break into new high, but I need to see for myself that the market can end this week itself at the upper end of the week's trading range. All I need is a close well above 45,153. So this is the longer term outlook for the Dow Jones. Now, as far as the S&P 500 is concerned, I think we also have seen that this week has been not fantastic. The last 2 weeks has been great because all the closing price, okay, for the month itself has been very, very strong, especially last month. It ended up near the upper end of the month trading range. So of course, we only have less than 1 week into the month of July, so it's still too early to say how this bar is going to look like at the end of July. Okay, but I suspect we are going to a very volatile period. July, August is going to be volatile. Okay, June, this is the last past week's trading activity. Okay, we can see that of the last few weeks, we only have one negative week, followed by 3 positive weeks. It's likely to conclude that this has momentum behind it, at least for now. Okay, so the target right now for me is 6,360 in the weekly time frame for the S&P 500. Likewise, when we look at the daily time frame, there is no counter trend. The market now is very biased on one side, which is the market is theoretically very, very bullish. So this bar that we saw on Thursday is not representative because it is half-day trading. Okay, so don't look into this as being a what we call an inside bar because it is not representative enough because it is the day before the market went to holiday. So I think the big move is going to come this week. Right, I'm not going to go down to the lower time frame because there's nothing more I can add to those. So this is the monthly time frame for the Nasdaq. And this is beginning to look like a little bit of hesitation. The high traded is 22,906 in the CFD markets as far as IronFX platform is concerned. So we can see that, again, this is not representative. This is not even one full week of trading. But you can look at the last 2 months. Last 2 months has been very positive. In fact, the last 3 months has been very positive since hitting a low of 16,329. So we have very strong rebound. So this month, July, I need to see something similar to what we saw in the last 2 months. Okay. But if by the end of the month it end up something like that, okay, then we all have to be very, very careful. For now, it is still too early. By the look in the weekly time frame, the market has a brand new high. Okay, looks like there is still momentum. So likely to see follow through buying in the coming days. Here is the daily time frame. Again, there is no counter trend in place. Immediate target in the daily time frame is 23,920 in the CFDs for the Nasdaq 100. Okay, so I have finished the US equity markets. I don't have the Russell 2000 for this platform. So let me take a look at the European markets. So we can see this is the FTSE 100. The market has gone into a bit of hesitation. The market has a challenge of the all-time high at 8,909.2. So last month, there was a high at 8,909.17. So it did not quite take out the all-time high. And then it ended up like this. This is telling me near term there could be a bit of hesitation in the UK equity markets, especially now that we know that the budget may not be deliverable. Okay, we will see what happens, and going forward, going into this market itself, because of the uncertainty as a result of the UK gilt market, there is the hesitation. Okay, so in the weekly time frame, we can see that also happening. We have what looks like to be a beginning of a possible retracement. Okay, a counter trend. This is not fully developed yet, but with one more week of trading, we should have the answer here. Meaning to say that, will this end up to be a corrective pattern? Possible. Okay, what looks like to be a possible, all we need is this week, this coming week itself, do not have a new low below 8,695. Okay, then the market will officially go into this counter trend. At the bare minimum, expect some bit of consolidation, if not a pullback. So in the daily time frame, we also have seen the counter trend already in place. In fact, this past week has been a bit of a struggle. After last week, the week before last, market failed to take out this all-time high. Okay, and then no, this high is I think the high, correct. And then the market seems to be struggling. So there is a bit of a consolidation here going on in the UK markets, with a little bit bias possible with further consolidation, if not near-term weakness. For the German index has gone into also something very similar. If you look at this performance for the month of June, the market went into a new high, okay, but end up as a doji. This is a reflection of the possible hesitation among market players in taking this index higher. By the way, we have read, we know for a fact the inflation in Germany has hit the EU target of 2%. And that could be translated as no demand because Germans are not spending. Okay. Yes, inflation based on the CPI numbers would suggest that inflation has subsided, but it's also to me a signal that Germans consumers are not spending. Okay, and that result in lower CPI prices. So when we look into the equity markets in Germany, the DAX now have an all-time high of 24,471.5. But the month of June end up like this, which is not a very positive development. That also reinforced the view that near-term European equity market may go into consolidation. When we look into the weekly time frame, now the FTSE 100 has not officially gone into consolidation, at least not in the weekly time frame. But in the German DAX, it has already gone into consolidation. meaning to say that where it is currently trading may invite another round of near-term profit taking this index lower. There is a possibility because you can see the high here has resulted in the first counter trend. Okay, so when we look in the daily time frame, it is evident. Perhaps what we are seeing here is a possible, like I said, a very possible three wave. They may result in the market pulling back. If the market pulls back, it's going to pull back below this initial low at 23,021, possibly into 22,750 levels. So that will complete a three wave, and if there's no acceleration to the downside, it may be where it stopped falling and may invite buying interest back into the market. But I think it does look like possible a three-way pullback below the 23,421 towards 22,750. Okay, so this is my take on the European equity markets. So it's losing a little bit of steam. Okay, whereas the Wall Street itself is still gathering momentum because that US-Vietnam trade deal, that news caused market to rally one more time. Okay, but that could easily be undone by July the 9th, when the US announced their tariff rate for the first 12 countries. If the tariff is exceedingly high, it may actually cause the US equity market to erase all the gains that we saw this past week, because the market has been basing on a lot of positive news. We have the US-China trade deal that now US feels that they are getting the supply of rare earth minerals. So that is positive. Then we have the fact that the US-Vietnam deal is also concluded. So that actually gives the market a little bit of positive spin. But if the tariff rate comes in exceedingly high, it will lead to a global recession, which will not benefit the US. If the global economy goes into a recession, countries outside America will have less ability to buy US products. So that will also reflect in lesser trade with the United States, which is not a good development. Okay, so we will have to watch out on July the 9th. Okay, where what will be the ultimate, the upper bracket of the tariff rate that the US want to impose on the first 12 countries. Okay, so continue to watch those developments. I want to take a look at Asia. Okay, we have a very strong closing for June for the Nikkei 225, and this is following very similar in the footstep of the Dow Jones. Okay, but we knew for a long time that 40,000 has always been a major barrier. Now, despite last month a trade beyond 40,000, this is about the first time it has actually closed above 40,000. Now, last month for the month of June, it closed at 40,239 in the index on a monthly time frame. Now, this is significant because if you look backwards, there was no month in which the Nikkei has actually survived above 40,000. Okay, so this is the first time it actually closed above 40,000. Okay, so this buyer is not reflected because we only have 4 days of trading, or 3 days of trading. For Japan, of course, it's 1 full week, but there is badly impacted by the lack of liquidity from the United States. So again, we want to watch this week itself. If the market can rally and close above 42,519, it will eliminate this counter trend and show that the underlying bias to the market on the month time frame has resumed for the bull market. And if that's the case, there's a possibility of a surge to 51,500. The fundamentals are all poor. Okay, so when you look at equity markets, they are all rising on very, very poor fundamentals. So again, I am not totally convinced, but again, we will have to watch. So on the weekly time frame, that will be interesting because on the weekly time frame, the directional bias, the dominant trend is actually down. Okay, now the market has managed to cross over 40,000 on a weekly basis, but this week itself, it closed back down below 40,000. This week, okay, or rather this past week, the closing price was 39,714. So this coming days is going to be very interesting. In fact, this week, if the market continued not able to close back above 40,000, it will suggest that there is heavy resistance above the level. But of course, if the market managed to close above 42,519, that will be a different story altogether. It will eliminate this major trend and having the counter trend, which is a rally from 30,357 to exert its dominance over the bear. Okay, so the crucial level to watch will be this level, 42,719. The market managed to trade above and close above, that will be a major game changer. It will bring back the boost, right? So in the daily time frame, do we see the same thing? We see that, yeah, the bounce from 30,357 and the daily time frame is the dominant trend. So we have a bit of a bit of a flux here. On a monthly time frame, the Nikkei is still bullish, but on the weekly time frame, we are beginning to see, we are seeing that the dominant trend is to the downside. Then on the daily time frame is back to the upside. So we can see that dominant trend, at least near term, there is support for Nikkei, but it all going to be based on where it closed by the end of Friday this coming week. Okay, not particularly strong, but there is the possibility here. Now the problem with Hang Seng may actually come off this week itself. You can see that the price has actually gone higher, but in Hong Kong, there seems to be an effort to drain liquidity from the Hong Kong equity markets. We have seen for the past 3 business days, the Hong Kong Monetary Authority, which is the central bank, has been trying to defend the US dollar and Hong Kong dollar peg. Now, we all know that the Hong Kong Authority pegged the Hong Kong dollar to the US dollars at a rate between 7.75 to 7.85. Now it is at the lower end of the range. So basically what they are trying to do, they are trying to drain liquidity in Hong Kong. And if you drain liquidity, there'll be less money for Hong Kong-based businesses, and there is the possibility investor may actually sell Hong Kong equity markets just based on this one factor of on an effort to drain liquidity from the Hong Kong market. Okay, just be aware that that could result in lower prices going forward this coming week. So if the market do come off, the area where the market has shown or have actually proven there is demand is between this bracket, anywhere between 18,600 to 20,000. Okay, so this bracket of prices has a natural area in which previously, okay, we see demand. Prices dipped into this and resulted in a very sharp bounce. So if the market do drop back into this area, it is logical to expect the same people who bought previously may re-emerge again to buy the drop. Okay, so if the price do drop into this bracket, maybe it is also worth considering because we have that counter trend move. The counter trend move has actually resulted in a three-wave rally. Now the three-wave rally has actually hit target of 1.236, hit the target and then come back down. But it could be a totally new pattern evolving because technically once the market has bounced in a three-wave, it should reassert its dominant trend, which is down. But it did not because the market seems to have buying interest just below the 20,000 levels. Okay, so maybe there will be something different in the Hong Kong market. But for now, just keep watch on how successful the Hong Kong Monetary Authority is able to stabilize the dollar versus the Hong Kong dollar peg. Okay. Here is the daily time frame. You can see that the market remains still positive, although we have what looks to be the building up of a potential counter trend here. But this is a minor trend. Okay. Sorry. Right, there are a couple of questions here I'll address before we move on to currency. Wei Ren is asking, do I prefer the Dow Jones to have a range right below the resistance than to jump up and sell down thereafter, right? I am not looking to sell just yet, okay, because both the S&P 500 and the Nasdaq, especially the Nasdaq 100, is leading the rally right now, okay? But now it seems to show that the Dow Jones is the weakest link. If I ever turn bearish, I am very open to selling the Dow, okay? And not so much the Nasdaq 100 or the S&P 500 because my reasoning is very simple. I will sell the weakest, buy the strongest. But because I am very leery chasing the market higher, But if I ever turn, but I'm not ready to turn bearish just yet. But if the day comes when I turn bearish, the Dow will definitely be one candidate for me. Okay, right. Jim is asking, Hong Kong sells the shares in order to buy the Hong Kong dollars and short the US dollar to maintain the peg. Yes, the 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 peg now is operating between 7.75 and 7.85. So as far as the central bank is concerned, to keep the peg, they must make sure the Hong Kong dollars will remain within the trading range. Okay, so if the peg ever breaks, it will have monumental impact on how the rest of the market behave. The Hong Kong dollar peg is very important for China because Hong Kong remains the window to the outside world. China doesn't want to open up their domestic markets, so they're using Hong Kong, okay, to actually be able to get dollars and to actually access the international capital markets. Okay, so to maintain the peg for now, Hong Kong still provide that usefulness to mainland China. So die they must hold the peg. So right now it's very easy, right? Near the lower end of the peg, okay, you buy dollar, you sell Hong Kong dollars. At the top of the range, you sell US dollars, buy Hong Kong dollars. So right now we are at the lower end of the trading range. So this is something that there will also result in liquidity being pulled to defend the peg. Okay, so this is something that you want to consider as well if you are looking into Hong Kong market, and particularly the Hang Seng Index. All right, without much further ado, let's move on to currencies. Now, I do not have the dollar index chart on this platform. It stopped updating for a few weeks ago. So now I don't have access to the dollar index. I can only look at the currency pairs. So as far as the euro is concerned, the euro, which I've maintained for quite some time now, is unfolding as a possible three-wave bounce. Okay, so we are very, very near the equality target of 1.19. Okay, this week high is 1.1830. Very, very close. Of course, we are still we are still in the initial days of July. So this month, if the euro continues to edge higher, I think the upside potential is going to get increasingly limited. That will change if any one of these highs are taken up. Okay, so I think based on the pattern that we are seeing lower highs. Okay, so if this current bounce in a three-wave structure to the upside cannot exceed 1.23 half or 1.2550, then obviously it will also reinforce the fact that we have another lower highs, okay, which will lead to a total unraveling of the euro dollar below 95 cents. And that's also one of the reasons why I think there's a good chance that the dollar index may be coming very near to an end of this run from January the 2nd. Okay, so increasingly as the dollar index continue to drop, and if it's accompanied by a reversal in the major currency pair, it will reinforce my belief that the dollar index has hit a bottom. So be very careful selling the dollars at the current rate, especially the dollar index, because if the other major currency pair starts to fall, okay, it will also cause a corresponding rise in the dollar index. So I'm getting ready to look at dollar, okay, because I think the dollar is long-term very, very bullish. So this has also been confirmed by the overall bigger picture of the euro dollar. The euro dollar is a long-term bear market. Okay, so for the market to bounce ABC, if it struggles and start to close lower, that will be my cue to jump back in and hold euro dollar short, and for another revisit below the most recent low that we saw in 2022. Okay, so a long-term trade could be up and coming in the major currency pair. So this is the weekly time frame. Again, it's very clear we have a three-wave very, very near to the ideal target of 1.1918. So this week high is 1.1830. So even if it struggles a bit higher, be careful. I hope we can go higher. So if you go high, I want to see the reaction, how it closes for the week. If it closes negatively, then that will be my cue to actually go into hold short position in the euro dollars and buy the dollar. Okay. So weekly time frame, is as far as I'll go because I think it is quite reflective of my overall look. Now, the pattern in the sterling is a little bit different, but nonetheless, you can see that the market is in a bear market. Okay, so that one is as clear as the euro dollar. This week we have a marginal high at 1.3788, but not much higher. So we don't see the equality move rolling out. But I think based on the nearby high, 1.42 half, 1.43 half, I think these two will be the levels to beat. So if the market goes much higher and become very hesitant in going beyond this initial high, 142.50, then and if it close to weak, then that would be my cue. This is the monthly time frame. Even the weekly time frame is the same thing. Okay. The immediate high here is 1.42 half. If this is struggling like this, okay, I want to see how it reacts near here. So I'm getting ready to buy the dollar, no matter how I look at it, whether it's the euro versus the dollar or the sterling versus the dollar. Now, the only difference will be the dollar versus the yen. Now, this one has a different dynamics altogether. Okay. Now, the Bank of Japan is not sure whether to hike interest rates because inflation is definitely gathering pace. So logically, you will expect the central banks to actually start to hike interest rate to contain inflation. But they are also very leery because they do not want a strong yen. If the Japanese have to face with a strong yen, that means on top of the tariff that the US is going to impose on the Japanese export into America, they will also be faced with another handicap, which is a strong currency. So definitely they do not want a strong currency. But I think at the end of the day, the Japanese government is conflicted. A stronger currency means they have less competitive advantage versus their competitor in the international markets. However, a weak yen is going to cause inflation to flare up because the Japanese import a lot of energy. In fact, they are totally depending on imports of energy products. Okay, so a weaker currency means you're going to pay more for the same thing, right? So is do they die? Don't do they also die? So that means, as far as the currency is concerned, technically speaking, there is the possibility of market extending lower below the 130, 140 towards 136.50. So technically, that would be at least a three-wave move, ABC move. And if this coincides with a drop to 136.5, followed by a strong rebound, just as euro dollar struggles and dip, just like sterling struggle and dip, and if the current dollar index continue to bounce, that is another reason to look at a strong dollar possibility because overall the dollar yen is very bullish. The Americans want the Japanese yen to Japanese central bank to actually hike interest rates, but Japan is very leery, okay, because right now they are caught in a very difficult situation because of the incoming tariff. They do not show what kind of tariff they'll be hit with, and they will have to make sure that they don't get overly exposed to US index. So this is the dollar versus the yen. Now, the other currency that is currently in a bit of a flux is the dollar versus the Swiss franc. Looking at the overall global situation, we all knew that the confidence in the dollar has been eroded. It has been falling for the last 6 months. So it's no longer working as a haven currency. The Japanese yen is also not preferred. Okay. So logically, investors overseas are looking at the next best currency, which is the Swiss franc. The Swiss franc, you can see, has been strengthening. So this is the move, the dollar coming off. It also shows the strength in the Swiss franc. But the Swiss franc has cut interest rate to 0. They are not about to cut interest rate to negative. So they are also struggling with another set of problems because during the quantitative easing that they did, the Swiss National Bank has actually used the money they raised in Swiss franc to actually buy foreign treasuries, foreign government bonds. And because those has resulted in a paper loss for them. So if you have a strong Swiss franc, if they have to bring back the Swiss franc, they would suffer because the same Swiss franc that that there was relative during the period when they were doing QE is definitely not the same value as those days. So instead of trying to welcome a stronger Swiss franc, they are actually very reluctant to have the Swiss franc appreciate, especially against the euro. Okay, so we have to continue to watch how the Swiss National Bank react. So far, we can see that the momentum in the Swiss franc has actually gathered strength. Okay, so last month it closed actually quite strong. So on the weekly time frame, we are still seeing the same thing. The market is about to go into a situation. If the market breaks 0.7570 in the weekly time frame, it would have eliminated this comfort trend, meaning to say the dollar versus the Swiss franc may continue to fall, which is not something that the Swiss National Bank want to see. Okay, but if it does goes below 0.75 75, for example, then it could cause the Swiss franc to strengthen even further. Okay, so this one must stabilize. Perhaps the Swiss National Bank will intervene just to hold the rate. Now, when we look at the dollar Canadian, the dollar Canadian has been falling for 6 months in a row, mimicking what we are seeing in the dollar index. The high is 147.95. Okay, so it is the counter trend. The dominant trend is for the dollar to continue to rally. So the dollar bullishness is undebatable. We saw that in the long-term dollar index chart. We see in the long-term euro and sterling versus the dollar chart. Okay, so we also saw that in the dollar versus the yen chart. So the dollar dominance, the bullishness in the dollar has not been compromised in any way. Okay, so long term, we want to be buying dollar and sell all other currencies. So for currencies that are enjoying a bit of gain, especially currency like regional currencies, whether it is the ringgit or whether it is the Singapore dollars, it will possibly reverse very sharply. Okay, so enjoy it while it still lasts. So this is the dollar versus Canadian weekly chart. Okay, we have a 5-wave down. So it has technically followed a 5-wave sequence, and the market is getting ready for a bounce to perhaps go back to 1.4 against the Canadian dollars. Okay, the market could well develop into a different structure altogether, but for now, there's a possibility of a rebound back to 140. What about Aussie dollars? This is the longer term chart. The Aussie is a major bear market. There's a strong rebound from 95 cents, 59 cents, and that is still the momentum. Okay, we have yet to see the 3-wave bounce in the Aussie play out. Okay, but for the last 3 months, we can see that a bottom seems to be in place at 59 cents against the US dollars. Okay, so Aussie may actually go up higher against the US dollars. So maybe the Aussie and the Kiwi markets are first reacting before the other major currency pairs. So this is the weekly time frame. We have seen a counter trend being in place. So going forward, there is the possibility the Aussie may climb a bit higher, with the first target being the 0.695. Right? So this is my Aussie outlook. My Kiwi is very much mimicking what we are seeing in the Aussie. The Aussie, the Kiwi, at least for now, at one point was in a very, very deep retracement at 0.55. Below 0.55, there was the period of, the very deep retracement started at 0.5480. So the market actually hit 0.5485 before it bounced. So this structure here, at least over the last 3 months, has been very much mimicking what we are seeing in the Aussie dollars. So the market can continue to bounce. Not a major currency pair, but it is also one currency that people like to watch. Immediate resistance will be at the $64 level, 64 cents level, sorry. Okay, I'm done with most currency, unless you have other currencies that you want me to take a look at. Let me check if there are any new question. No new question, we'll move on to gold. Now, gold has not do a lot this past month, okay? We have a bit of a consolidation going on. Prices have surged okay, to an all-time high of 3,500, and then gone into sideways consolidation. This is the monthly time frame. So this is the initial target here, okay? Now the high remains at 3,500. Whether this high will be taken out is only a matter of time. It's not whether it will. I think it's just a question of when. Here we have the weekly time frame. If we are right, there is still the possibility of another pullback. What will cause that, I have no idea, okay? But if there's going to be another pullback, I don't think I will be surprised, because another dip below 3,121, it is definitely a possibility, technically speaking, because that will be, refers to a three-way pullback. Target is about 3,070. I do hope the market can pull back, because I have yet to buy, okay? And I want to see if there's a possibility of getting it at a much better entry. Daily time frame, there's a few lines we want to watch. Okay, now the market looks like to be in a triangle. Okay, and the triangle, if this is a triangle, assuming I don't want to take a look at this one, this one is an outer support line. So what we are seeing here is that prices has been trading narrower and narrower towards an apex. This is the apex here. Okay, so if this is a triangle, that is easy to play. Meaning to say, I don't even have to look at this one. I just have to move into this area, right? So this is a smaller triangle, right? So if this is a triangle, that will be easy to play. In my opinion, if this ends up to be a triangle, then there is the possibility of a five-wave movement. A, B, C, D. If the market go up and cannot break this high, that will develop into a D. And this, it will be very, very interesting, because after that is concerned, that the D develops, there will be one last pullback, not lower than this, 3,245, 3,247.4. So if we do see an extension in gold, but cannot break 3,451, then it will result in another pullback. And if this pullback will be the last call, because if this is triangle, this will be A, B, C, D, E. And after that, there will be a violent breakout to the upside, okay? Equal to the entire distance traveled between 3,500 to 3,121. So you can extrapolate the entire length of this move here at a point of breakout. Now, this is still unfolding. I want to see another rally attempt, no higher than 3,551, and then a pullback not lower below 3,247. And once the market starts to rally, this is where you want to go in, and not do at the breakout. You want to do it at the beginning here. Because this move, if it's correct, will be a very fast move. It will result in a very violent breakout equal to the distance of these 2 points here, and then reverse very, very shortly, what we call a post-triangle thrust. Okay, so I like to trade triangles because it's fast, it's violent, and if you wait, you are going to not be able to get it. So this week is going to be very interesting. I want to see how the gold market develop. This is based on daily time frame. Hopefully, this is something that can happen tomorrow, this coming week. Okay, so I'm very excited to watch the gold market this coming week, because it has a possibility of a fast trade possibility. For the silver itself, you can see silver remains very bullish. In fact, silver has been outperformed gold during the same period. Okay, so we can see that last month we have a high of $37.30, and this week itself we closed at a much higher high compared to where the market closed for end of June. So, but this is a bracket the market needs to break out. If the market can break above this and close above this, the next logical level is to take out this level. $44.21 is imperative the market take out $44.21 on the monthly time frame to convince me that the bear market that we see in silver is over. Because this happens on the monthly time frame, it is very, very significant. Okay. For the silver market to maintain its rally, it needs to take out $44.21. Okay. So right now it is three-wave. We have hit the bare minimum target of $35.76, but it's still operating between $40 to $35.76. So I need to see how the market reacts here. Ideally, we see a breakout above $44.21. Okay, so overall, it does look also positive for silver market, but based on what we see so far, there is the outside possibility we may end up as a three-way. but it is still lower to buy, regardless of how you look at it. You can buy at a breakout or you buy on pullback. Definitely, I would prefer to buy on pullback. Okay, but I think the excitement will probably come in gold market. Gold market is time for gold to take back the lead. Okay, let me check if any question for you. No new question. I'll go into oil market. Now, from the earlier explanation, you knew that OPEC Plus has agreed to increase production to 541 barrels per day. Okay, oh no, 541 million barrels. I think, yeah, 541. What was it? Was it million, thousand? Can't remember. Anyway, the big figure is 541. Okay, so we can see that oil prices remains in that negative bias. Can crude oil prices go lower? Very possible, especially after last week rejection of the $76. Okay, so we can see prices now, technically speaking, can still drop below the so far the low at $54.76. But long term, the lower it go, the better it is, because I want to be buying oil for the long term, because I do not believe the situation in the Middle East uh, uh, is over. I think there will be more bad news coming out from the Middle East, because I do not believe Israel is going to stop wanting to attack Iran. Okay, so if that's the case, it's a matter of time when that the situation in the Middle East in regards to Israel and Iran will flare up again. Okay, and this time when it flare up, it will be major. So that may actually engage, that may result in higher oil prices. So going forward, if there's going to be a technical pullback in oil, okay, like I said, US cost of production is about $65 per barrel. At the current price, it's barely profitable. So if the price can go deeply negative, especially into the $35, no US producer, oil producer will be able to survive. They will stop production altogether. Okay, and that will be able to fulfill what the OPEC Plus is trying to do. They're trying to take out all the high cost producers. And then that's where, coupled with an escalation in the Middle East, prices of crude oil has nowhere to go but up. Okay, so I'm actually long-term bullish on crude oil, although right now there is no sign that market is getting ready to rally. But if the price do drop, okay, I will continue to monitor, but I am of the view that the Middle East situation is not going to improve. So here we have the weekly time frame. We have to see the major reaction from $76.66. This is major, okay? So we have a bit of a bounce this past week, okay, but it is insignificant. This drop here, when you look at the candle itself, is one ugly black color bar. When you look back into history, all the way back to 2022, other than this bar and this bar, okay, this is about the most ugly bar you can see. And both the appearance of such a bar, this kind of structure, result in lower prices. So there's possibility we may see lower oil prices. But on the with the Middle East background, I am not open to selling crude oil. So this is the situation on the daily time frame. Okay. Market needs to break below $55.13 to continue to trade lower. So I'm going to watch the oil market and not necessarily going to be a player. Okay, now it comes to Bitcoin. I think Bitcoin is waiting for something to happen. You can see the structure of the Bitcoin. On a close-to-close basis, this week closing in a few hours' time could mark the highest ever closing in Bitcoin. The intra-month high is 112,000, thereabout. But when you look on a close-to-close basis, this is actually one of the strongest closing you can see. You can see this is the strongest closing. Okay, so that is to me very positive. So I think the market is waiting for a reason to jump, and that reason could be once the Genius Act is passed, it may cause a knee-jerk reaction by people who are waiting on the sideline to jump back in. Okay, so right now we have a bit of consolidation, but once the market break this all-time high, it's going to extend higher. Immediate target, I can't see from here. Okay, can I see from here? I can't. Okay, I can put this. So on a daily basis, definitely the prices is still in that situation. There is still an outside chance that we will do a three-way pullback, but I am highly skeptical about that development. But if you ever pull back, this will be a good area to pick up some, the 93,000 to 96,000 levels. Highly unlikely that it will pull back through deep. But if it does, this could be a buying area. Okay, for those who do trade digital assets, maybe I can also cover the Ethereum. Now, Ethereum has a totally different structure. The underlying is very bullish. We have a bit of consolidation, and prices since has rallied, but the momentum seems to has petered out. Okay, last month we have a higher high, but it did not end up as higher high on a closing basis. Weekly time frame, you can see market is still in the period, but it's still trying to find its way. But if there is going to be a pullback, this area here is going to be an area of demand. 1,730 to 1,872. So if the price do dip into this bracket, look out for possibility, the re-emerging of buying interest. For those who are into Ethereum, this could present a buying opportunity. Okay, in the daily time frame, you can see that this could work out to be a three-way, and that points to a possibility of a dip into the bracket of price. Okay, three waves exactly into this bracket. Okay, so continue to monitor. I'm not going to take a position just yet. Okay, I have not been trading Ethereum for quite some time, but I do have interest in Ripple. Okay, this is the daily time frame for Ripple. You can see that Ripple overall is bullish, and so far it has always managed to find buyer below $2. So most recent low is $1.90, and then market continue to rally higher. So it has not resulted in an explosive move just yet. I'm holding a long position, but then again, the swap is killing me. So not necessarily, I need an explosive move very soon. If not, every day I'm holding long position, the swap will be eating into my profit. So this is the 4 hours time frame. Immediately, I need the market to go above $2.56. If that is the case, then on the 4 hours, it will turn positive big time, from dominant trend being down to dominant trend being up. Okay, so I badly need Ripple price to go above $2.36. So if that's the case, any kind of pullback later on, I'm going to add. Okay, because I think at the end of the day, stable coin, which is what the Genius Act is all about, may actually benefit other tokens that will be looking to use, that may be used for the creation of stablecoin, and Ripple is definitely one of them. Okay, the passage of the Genius Act only benefit one of the two major dominant stablecoin right now, which is USDT and USDC. But I think the passage of Genius Act is going to negatively impact USDT, because USDT is not operating. Americans cannot buy USDT. Okay, so that is a major problem. And when USDC Circle were listed, you can see their share price actually exploded. So it will benefit more the USDC more than USDT. Okay, because USDT has its jurisdiction in El Salvador, which is not exactly a major financial center. It is outside the US circle. Okay, so definitely, if there's going to be a Genius Act in path, it will benefit other potential stablecoin issuers. Okay, and Ripple is definitely within the regulatory umbrella of the United States. So maybe Ripple may actually benefit from this passage of Genius Act, which will almost certainly be passed. Okay. All right, I'm done with my presentation for the day. Unless you have more things for me, unless you have things that you want to ask me. Let me see if there's anything else. There's no new question. I think you're quite happy with the things that I mentioned today. So hopefully this coming month is going to be explosive, which I think it will. If anything, it will be volatile. Okay, because April the 9th is fast approaching. We want to see what kind of tariff Trump is going to impose on the other countries that have not had a deal with the United States. So we want to continue to watch. All right, guys, thank you very much for your time, and I shall see you next Sunday. And remember, on the 17th, okay, I'll mention it one more time next Sunday, whereby I will be hosting a webinar for CGIS, which is previously the CIMB futures. So the topic will be focused exclusively on US equity markets, in particularly the micro E-mini US equity markets. So if you're interested in that, you're more than happy to register for the event. You can find the login on my Facebook posting. I will repost it sometime this week. Okay, so that if you're interested, you can always register and join us. All right, guys. Good evening, and I shall see you next Sunday.